All right. What's going on, everyone? We are live. Let's make sure this is all working here. Da-da-da. All right. All right, guys. What's going on? Good to see everyone. As you guys know, my name is Sumner Healey. If you're new here, nice to meet you. We run a company called landinvestor.co. We help folks start and scale 6 and 7 figure land investing businesses. And what we're going to do today is we're going to talk about how to recession proof your land business, right? What to do in this current economy we find ourselves in. And I'm really thinking about, okay, things might be bad now, but what if they get worse? Right? What are we going to do if the economy gets worse? So we're going to talk through today what I'm calling my ground rules, some of the things that we're focusing in our business, and the other things we're going to go and kind of break down the internal workings of my land business and show you how we've structured things. Now, frankly, some of this stuff is just by coincidence. I didn't mastermind this stuff out 4 years ago. We did get lucky, but I think there's some things to take away from how we've actually structured our business. And so it's my hope here today that not only do you guys learn a thing or two about land investing if you're new to the game, but if you are a current land investor, it's my hope that through this breakdown today, you can recession proof your business. Because the truth is, you do not need to have your business suffer during a recession. You just need to change the way you play the game, right? Why do we still have Leah members that are coming in brand new to land and making 200, 300, 400 grand in 3 months, 6 months, 12 months? Why is that, right? And one of the worst economies that we've seen since 2008, how are they able to do that? Well, it's following a lot of the things that we're going to teach here today, okay? Without further ado, I guess we'll dive into it. We got 5 folks here. One thing I will say, guys, if you have questions, put them in the question box. I will make sure I get to every single question before we close out this video. You guys know I like to bring the value, and so hopefully I'll be able to do that here today. One last thing on the housekeeping note, we've sold out 100% of our tickets for the Leah Mastermind in Las Vegas. Over 100 tickets sold. Really a crazy experience. You know, one thing that I heard about running events is they say all the sales, over half of your sales come with the last 4 weeks. And that definitely was true. It's been crazy how many tickets we've been selling. And then, of course, we sell out all the tickets, and now everyone's coming out of the woodworks. I need a ticket. Oh, my God, I was waiting. Don't be that person, right? Don't wait. But I promise you this will not be the last event that we ever throw down. In fact, I think that we will leave a pretty big stamp in the land investing industry in terms of trying to foster connections and camaraderie and build a really, really large events business outside of what we do on the education side. All right, guys, well, that's enough rambling from me. Let's dive into it. Again, questions, put them in the question box, and I'll be sure to hop into them. So let's talk about the ground rules, okay? Before we go and break down the inner workings of my business, I'm going to break down the ground rules of successful land investing during a recession, okay? Again, it's not so much that this business doesn't work anymore. It's just the way it works is a bit different. So the very first ground rule that we've been focusing on in our business is finding what we call patient capital, okay? The problem with most land investors is that they are solely reliant on either funding deals through their own money, which that's a problem for a multitude of reasons. You will be the bottleneck to your growth, or they're solely rely on joint venture money, right? Most joint venture money is going to have some time-based component, right? Where you give up your right to the property after 12 months or 6 months. In a market like this, that's going to be your biggest bottleneck, right? If you're just relying on internal kind of land investing funders, that's going to kill what you could be making on your deals. Because the truth is, in a recession, it's not that deals don't sell. It's that deals take longer to sell. And so if you have patient capital that's outside of the land investing industry, right? One of my biggest recommendations to you guys is find funding partners that aren't in the land investing world, right? They don't have context on, you know, wanting 50% equity in a deal or wanting the deal to sell in 6 months. Expectations are totally different, and you get to set expectations, right? There are many, many potential partners out there on the money side that would be elated to get 10, 12, 15% returns in a 12-month period. They'd be elated, right? And so not only can we bring our cost of capital down, we can also extend timelines. I don't really give a hoot if my deal sells in 3 months versus 6 months or 9 months. If I got cheap enough money, I don't really care, right? It's nice when they sell quicker, but that only becomes an issue when you've got this kind of time limitation. That's typically through JV money, okay? So the expectation is deals will take longer to sell. That's totally okay. They still do sell. So we need to find patient capital. My recommendation to you, go to RIA events. Go find other real estate investors that are in land. Go find high net worth individuals. Go just start talking. I always tell people, go shake hands and kiss babies, right? Get out there in the real world and meet people that are outside of land. There are many, many people that would be elated to fund your land deals, okay? We're going to talk about how to actually do that and kind of when the time makes sense in your business. The next thing that is our ground rules: only close on 10 out of 10 deals. Okay. Man, this is a hard lesson for me to learn. I see a contract come across my desk. I start rationalizing, why we should do the deal, or I think we can make 40K on the deal, so we should do it. I can start getting dollar signs in my eyes, and I start creating justifications as to why we should do the deal. When markets are frothy, when markets are just constantly running up, you can get away with that, right? We used to sell crappy deals 2 years ago, deals with bad access, bad topography, flood zone problems. People wanted those deals. They still sold really, really quick. And again, those deals still sell. They just take exponentially longer to sell than a good deal, right? And my theory is, well, what if the economy does turn more, right? What if the S really hits the F and things get way, way, way worse? If I have to have deals on my balance sheet, I want them to be good properties. I want them to be what I call properties with intrinsic value, okay? I currently live in part of the year in Las Vegas right now. Las Vegas it's growing a ton. It's a very growth focused market. There's a ton of development everywhere. So if I own a 5-acre plot in Summerlin, which is here in the west side of Las Vegas, even if the economy turns, I know that even if new home construction pulls back or whatever it may be, that land is still going to be in demand, right? This still has intrinsic value. Utilities are close by, development's all around it. Even if they don't want to develop it now, eventually someone will. It has real intrinsic value. Now you go own a 5-acre lot in Mojave County, just south of me in the middle of nowhere, very low intrinsic value, very, very low intrinsic value. So when the market starts to correct and things start to get worse, I don't want to be holding on to junk lots. We can move junk lots in frothy times. I'd rather not hold them now. And again, you can still sell them. It's just way, way, way harder. So the thing about 10 out of 10 deals is there's always going to be buyers for 10 out of 10 deals, right? Imagine a 40-acre in Colorado next to the Colorado River with trees on it and a mountain on it. Someone always wants that. That will never go out of style, ever. I don't care what the new iPhone is that just got released or what's going on in the world. A property like that will always have intrinsic value, no matter what's going on in the world. 10 out of 10 deals, there's always buyers for them, okay? The other thing is, if shit hits the fan, I want to have good stuff on the balance sheet. So I constantly have to talk myself out of doing deals where it's like, man, the access is really bad on this one, or the topography is really bad, or the flood zone is bad. Even though I know there's margin there, I've got to talk myself out of doing those deals because they just create so much friction in my business. They're just really hard to deal with. They kind of turn into black holes that start sucking up a ton of your time. Now, our rule of thumb is we're only talking about closing on deals. So if you want to double close or sign a contract, it doesn't have to be a 10 out of 10 deal. But if we're going to cash close on a deal, it needs to be 10 out of 10. Okay. Number 3, here's a ground rule. Understand that comp data lags. Boy, this gets people in hot water, and it kind of shocks me that more people aren't aware of this. Okay. Markets change, they ebb and they flow, right? The good news about real estate is it's not as fluid as the stock market. Day-to-day stock markets, it's like a roller coaster. Land and real estate, it's a much slower moving asset class. That's why I like it. But it's still, over the months, values do change, okay? And the psychology of buyers changes. And so if you're going and looking at comp data from April of 2023 and trying to compare it to now, big difference. Could be a big difference, might not, but it could be, right? So we got to be really, really mindful and understand that data lags. And so what do we do to counteract that? Well, if you want to be conservative, you could add a bit of a discount rate to the comps. So you can say, hey, any comp that's 6 months old, I'm saying it's 90% of that value today. Any comp that's 12 months old, I'm saying it's 85% of its value today, right? In this game, let's be conservative. I always tell people, really what we're doing here as land investors is we're managing risk. That's it, right? We really never know how much we're going to make on a deal. We just have to manage the downside and then plow as much money into the system as possible. But to do that, you've got to be conservative. I'd rather miss a few deals to stay safe on a few deals. So applying a discount rate. The other thing is finding the most up-to-date data. So how could we do that? Well, we can go and look at what's under contract currently, right? Inside Leah, we've been using under contract filters for a while now and really putting emphasis on under contract versus sold from 3 months ago, whatever it may be. You can call realtors, right? Folks that are boots on the ground that kind of have their finger on the pulse out there will have a bit of awareness. Even if they don't know the exact pricing, they might be able to say, hey, there's been a real slowdown in interest in land in this area or in this county. And so you can kind of get the canary in the coal mine, right? That preview of what might be to come. Even if they can't tell you specifically, hey, land is worth X, Y, and Z. On the flip side, they might say, yeah, Sumner, land has been booming out here. It literally hasn't changed throughout this entire recession. Cool, because now I can feel a little more confident using that old comping data. One of the things that's been such a value add to our business this year, and I used to just poo-poo realtors, but it's been such a value add for us to get great realtors on our side. We don't have them in every market because they're still hard to find, but the few markets that we do, it's noticeable the difference in how confident we feel to take down bigger deals. And they walk the properties, they give us insights on what's going on in the market, and it's really, really helpful, right? So understand comp data lags. Number 4, ground rule, find note buyers. Maybe saying something, where would I find note buyers? Well, one of the ways that we can get our properties to move faster in any market, but specifically during a recession, is by selling them on owner financing terms, right? And the funny thing is, like, this is how outdated the land business is. People think, well, you sell it on owner financing terms, you've got to hold the note. You don't. In every other real estate class where people sell notes, there's a whole other camp of note buyers, right? Where there are notes, there are note buyers. The problem is most note buyers don't know about land yet. I guarantee you fast forward 5 or 10 years from now, note buyers are going to be all over the land space. But as it stands now, most of them don't know about it. So you've got to go outbound and connect the dots, right? They're probably not going to reach out to you. You've got to reach out to them. But there are folks that have been buying notes for decades that would be all over your note. So we sell it on a note, and then we sell that note and get cash immediately. So it looks like a cash sale, right? And a lot of times you're going to get pretty much the same amount that you would if you sold it on a cash terms, or maybe even more. And we can sell it way faster, right? So every property we have listed, unless it's a very special circumstance, is going to have owner financing terms included, right? Typically what we're going to do, if you guys want to stay on the safe side of owner financing and getting the most money you can when you sell that note, 20% down, right? So try to have 20% down, 10 to 12% interest, 5 to 7 year term. Okay. If you stay in that window, people will want to buy your notes. If you're doing 5% down, 20-year notes, 5% interest, you can still sell them. You're just going to get a really crappy discount rate on that, right? So here's the math. If we sell it with 20% down, it's less than 7 years for the total note, and we're at that 10 to 12% interest, you should be able to get about 80% of that note's value. Okay. Sell it for 100 grand. You keep the 20 grand as a down payment. Then you sell that remaining balance at 60%. Looks like 80% total. Not bad, right? And they'll buy those notes at closing. So when you go to close, boom, you instantly sell it, just like a cash deal. That's amazing. Instead of having your property sitting up there for 6 months trying to get a cash buyer, you can move it in 3 months or less and get a note buyer to come in and then sell that note. Now, a couple of rules for the road here. Only works if we're doing 10 out of 10 deals, right? If you're doing low intrinsic value, junk properties in the middle of nowhere, no one wants to buy those notes, right? Note buyers, note investors are savvy. They're way more savvy than a retail buyer, okay? Retail buyers will buy your junk property, note buyers will not. So it has to be close to a 10 out of 10 deal with real intrinsic value. The other thing is that it's got to be on a deed of trust. So there's 2 main instruments that you can use for financing properties: a deed of trust or a contract for deed. Deed of trust is what note buyers want for a lot of reasons, right? Contract for deeds are looked at as kind of a shady instrument. People don't prefer them. They really do favor you as the landowner or the person that owns the property that's being financed. And so for smaller, crappier deals, we will use a contract for deed. But a deed of trust is always going to be what note buyers want. So just think about that, right? And that's also, if you go and close through title, every title company is going to use a deed of trust. I don't think any title company would use a contract for deed, okay? And so you're going to want to close through title because the note buyers are going to want to put the money into escrow, all that jazz. So, a lot of the things that you guys are going to learn here today is that the people that are willing to go outbound, right, step out of their comfort zone, will win big during this recession. I mean, recessions are sad no matter how you slice it. People lose their jobs. There's hardship. Like, you can't justify a recession being good. But if you are a savvy entrepreneur, it can really stack the cards in your favor or put the chips in your pile. If you play your hand right, it can be life-changing. In fact, most of the biggest businesses of the 21st century have been created during recessions, right? Huge transfers of wealth happen during recessions. But how does that look like for land investors? Well, what that looks like is if you are going to expect everything to come inbound to you, you expect the money to come to you, expect the note buyers to come to you, the deals to come to you, you're sorely mistaken. You've got to go outbound. You've got to go find the patient capital. You've got to go and find the note buyers. You've got to be a pioneer, right? This stuff isn't in the land space in a big way yet. So you go out there and create that. If you can create that, you will eat everyone's lunch, because the person that has to go and sell their deal in 3 months because they're using cheap JV money, or expensive JV money rather, you could eat their lunch if you come in with longer term debt or whatever it may be, or even joint venture. Same thing with the note buyers. Okay. Number 5, ground rules. Reduce payroll, use contractors plus interns. Okay. I don't know if I'm actually going to do a speech at the event. I think after 2 days of emceeing the event, people are going to be pretty annoyed of hearing me talk. So I might just not speak and give it to one of our guest speakers. If I were to speak at the event, though, and you guys can put this in the comments if you find this interesting. And by the way, if you guys are getting value during this call, give me some love in the comments, right? Give us a thumbs up. Subscribe if you're new here. Honestly, I'm human too. I need a little bit of love. Show me you guys actually like this. If you don't like it, give it a thumbs down. That's fine too. Okay, one of the things I was going to talk about at the event, though, is how I've been building out this team of interns. Okay, been a really, really powerful play for our business. The internship model has allowed us to get grade A talent in our business, people that are phenomenal, that want to learn the land business. And in exchange, we get high quality labor at pretty much no cost, right? Some of it's free, or some of it is based off of commission, but we have no payroll associated. We don't pay an hourly wage. In this country, and for a long time, just in human history, the idea of shadowing someone or being an intern for someone is kind of deeply rooted in the history of humans. And most of us don't realize what a win-win scenario that is. That person gets free education and gets to learn the game, and you get free labor. So use that, right? We've been using that, and it's been a really, really powerful lever in our business. We've actually had a lot of Leah members that we've taught to do the same thing, because instead of paying 3, 4, 5, 6 grand a month in someone's salary, you got to bring in these hired guns, and you only pay them on performance, or you pay them nothing, right? Some people will do it for free. I'm not a big fan of doing it for free. I'm a fan of paying people for performance. And I think it creates a better incentive. Okay. So interns and then contractors. What do I mean by contractors? Normally I am the guy beating the drum about building a team. And I think that you can't circumvent having labor. You need labor of some kind in this business. You can't do it on your own. Okay. Being a one-man band will just won't take it very far. So we need labor. We need to delegate. I usually am against contractors until things started to change. When I started to look at our payroll and say, wow, we're spending a lot every month. What if I could just pay based off of performance? So yes, we've got the intern model, but then the same idea, using realtors, right? Okay, what if we just use realtors to list our property? And yes, we will pay them more in total, right? But we won't have this cost hanging over our head every month. And so we actually have kind of been repivoting our dispositions team to moving almost entirely to realtors, right? And so I think anything that we can do to bring in labor, we need labor, anything that we can do to bring in labor in a very sneaky, cheeky way without having this floating cost is so powerful. And again, I think that's why people like myself or other folks that have an edge in this business, because we think outside the box, right? If you're still just thinking about using JV money and keeping the note and having a VA or your cousin work for you, you gotta think outside the box, right? We get paid for solving problems, and the more creatively we can solve them, the more upside there is, right? So reducing payroll, use contractors, interns. A lot of what we're teaching now for Leah members that are just getting started is really circumventing having a dispositions team, right? I used to love that idea. I still think there's benefits to it depending on what kind of business model you want to run. But for most new Leah members, it's like, hey, build your acquisition team, a generalist VA, and use interns or use realtors rather. You can have a team of 2 or 3 people and have a 7-figure land business, right? If we know how to bring in interns and contractors correctly. Okay. Number 6, ground rules, master market selection. You guys hear me talk about this ad nauseum. It's probably annoying, but it's so true. Think about things that have leverage that can totally change the outcome of your business, but cost nothing. Selecting markets is one of those things. Right? The better you can get at that, the easier everything else is going to be in your business. It doesn't cost you anything. That means that we can get into markets that have the right kind of inventory. Our deals can sell faster. We can cut down our turn times, disposition process, all that stuff, just by selecting better markets. Okay. Number 7 on the ground rules, get help. Get help. Right. I think so many people still have this old ideology of, oh, the land business is find the data set, mail the data set, get deals. Well, it hasn't been that for a long time. And it's definitely not going to turn into that. This business is only going to continue to get more complex. Okay. Think about wholesaling in the 90s.
Wholesaling in the 90s, wholesaling houses was super easy. Look at wholesaling now. Look at any wholesaler's business. Those people are ruthless. Like they know their KPIs. They know everything down to the decimal point because they have to, because the bar has been raised. The bar will continue to get raised in this land business. So if you think that you're going to go and watch a few YouTube videos, send out a few mailers and build a land business, you are sorely mistaken. Right? Get help of some kind. Watching YouTube videos helps, but it's not enough. It's not enough. Okay. If you guys like that, drop some love in the comments. Let's talk about the inside of Sumner's business. Before I do, let's just take a quick moment to look at the comments. Secondary market for lead tickets. LOL. That's a good idea, man. If you guys, someone wants to make some money, you guys could sell some tickets. What sort of return do you advertise that you can provide? Is that annual or quarterly? It's so circumstantial, Alec. It's definitely case by case. I think that like if I'm starting out a conversation with a new investor, I'm probably going to start with joint venture terms. Okay. Start with joint venture before debt. Safer for you, safer for them. Okay. Probably start at 85-15, 90-10. And this expectation that I would set is look at every deal takes about 12 months to sell, 9 to 12 months. Set that expectation. Everything in life is just expectations, right? When it sells in 3 months, they're going to be elated. But if you tell them every deal sells in 3 months, they're pissed when it takes 4. So do yourself a favor, set expectations, right? I would start there. I would do a few deals together. You set the bar really low, so you're going to exceed expectations. They're going to say, oh, this is amazing. And say, cool. Now what we're going to move over to is a debt model, kind of like a hard money model if you want, where maybe you pay 10% interest, 12% interest over a 12-month period. However long that money is out, it's prorated at that amount, and it's deal by deal. Okay. So they might have 200 grand. You don't take that whole 200 grand and just like start running with it. It's, hey, I bring them a deal at 50. They say, cool, I'll give you 50. And now we're paying interest on that 50, and it's going to be prorated monthly. So if it takes you 3 months, you're paying whatever that is over 3 months. I mean, honestly, I think for us, we'd probably start the conversation probably closer to 15%. But we'd only do that once we've built kind of a track record with them. I'd like to do that JV. Like, I'm not a capital raising guru. Like, there's people that know way more than I do, but that's simply how I've done things. The truth is there's a lot of money out there, right? It's more about finding the right partners for you. What you don't want to have are partners on the money side that want an update every week, that want to like pester you, want like, why hasn't it sold yet? Partially, some of that is expectation setting for sure. Partially, it's also just bringing on the right people. And so if you have the mindset there's a lot of money out there, don't bring on the people that are going to be basket cases, okay? Joshua, when and where is the event? It's October 27th, 28th, 29th in Las Vegas, and tickets are sold out, but maybe Alec will sell you his ticket at a premium. We'll see. Well, let me grab a sip of water real quick, guys. All right. If you guys have more questions too, feel free to put them inside the chat. Happy to answer them. You guys know I'm here to help. I love to do this stuff. So if there's anything I can do to help, just pop it in there. Let's talk about the inner workings of my business and how I think that the way we've built our business actually really sets us up to be in a very, very, very exciting position during this recession. And again, I hate talking about being excited about a recession. It fucking sucks. I'm not literally excited about it, but I think we've set ourselves up in a cool way. It's depressing to think about the consequences of a recession upon everyone. And it could happen to me too, but I think we've set ourselves up in a way to be safe. So I look at our business in terms of having 3 different divisions in it, okay? Now, if you guys have been here long enough, you know I always talk about having a conveyor belt in your business, right? I would say master one angle of this business, build a conveyor belt around that, get the right people at each point in the conveyor belt, build systems, processes for that, scale that. We built a conveyor belt that, like, imagine it goes like this, and there's a few different hooks. It can go a couple different ways, but it's using a lot of the same raw material, okay? It's very, very similar, but there's a few different, it could go here, here, here. There's really 3 components. So the top component of our business is what we call recurring revenue, okay? We're going to talk about deals from smallest to medium to biggest and how that actually relates to revenue in our business. Okay, so we've got the recurring revenue component. Now, we've been building our note portfolio for a long time, probably about 3 years now, okay? I think we probably get about $30K a month or so in recurring revenue from that. These are from small, cheap little deals that we self-fund. So every year, let's say I make, $500 grand, $1 million, $2 million, whatever it may be, I take a certain percentage of that money, call it 20% of our profit, and I go and deploy it into owner finance deals. So I go buy these cheap little properties. They are low intrinsic value, yes, these cheap little properties, and we sell them on owner financing terms. So we've got hundreds of these properties that every month pay us 100, 200, 300, 400, 500,000. You have one property that pays us $10,000 a month. So come to think about it, we're probably closer to $40,000 a month in recurring revenue, including that property. So what I do is I just take a chunk of our profit, right? I don't need cash sitting in a bank account. Take some of that money and build recurring revenue in your business. Now, what this recurring revenue allows us to do is it has predictability. We know every single month, rain or shine, 30K is coming in. And so that allows us to take risks, that allows us to be long-term minded, and that allows us to cover our bases. That means every single month, I don't have to worry about payroll, about marketing costs, about software stack. I know it's covered. Cool. I can think different because of that, right? The most valuable revenue in any business is recurring revenue, right? Most businesses are feast or famine. You don't have new deals coming in, deals selling, get yourself into a really sticky position. Just like I was talking about with patient capital over here, how that allows us to be longer term minded with selling our deals. I don't need to rush and sell them immediately. So does recurring revenue. That means if a deal takes 6 months to sell, I'm okay with it, right? It's really fine because I'm not having to have that deal sell to keep the lights on. Now, what I will say is this is a 3-year process. Okay. That does not happen overnight, but it's just like the same thing with like, if right now, let's say you make money at a W-2, it's the same idea that at your W-2, every month you take 20% of your money and you put it into index funds, right? Or whatever it is. I've always been a big believer. It's like take a certain percentage of your income, invest it, take a certain percent, save it, all that stuff. We want to do the same thing with our land business. Take a certain percentage, put it into owner finance deals, okay? Now, these are not owner finance deals that we're looking to sell. These are owner finance deals that we're looking to keep. It's a whole separate strategy in terms of how we do that. Suffice to say, it's not that difficult to do, though, but you just have to set aside the money for it. The second division in our business is what I call mid-market pops. I love these names that I've come up with, okay? Mid-market pops. Really, this is the strategy that we built Leah on top of. It is this mid-market strategy. We go and buy deals that are between $25,000 and $250,000, and we typically double our money on them. And they are 80% of the time going to be cash sales. And the times that they aren't cash sales, they can be on owner finance notes, and we can sell those notes, right? This is how we get deals that bring us in 20, 30, 40, 50, 100K of profit into our business per deal, right? What's nice about these deals is that they have the highest number of buyers, right? They're big enough to bring in outside capital. And then when they sell, they actually have a meaningful impact in our business, okay? Now, if you want to go sell $2 million properties, problem is there's very few buyers for them. Also really difficult to buy those with enough margin, right? Sellers up there are savvy. So what we found is in that mid-market area, we can almost always double our money. They're big enough to bring in outside capital, and they have a large number of buyers, so they sell relatively quickly. All right. Super, super cool. This is the backbone of our business. The backbone of Leah. And so every month, maybe we get 3, 4, 5 of those deals to sell. Cool. It's an easy 50, 100K a month of profit coming into the business. But if we have a bad month, I'm not scrambling because we still have this coming in. Okay. Now, a couple of different ways you can take those deals down, right? You can use outside capital. You could assign those deals. Like I know a lot of people get those deals and they assign them to new home builders, whatever it may be, or you can double close those deals. So you got a few different exit strategies in terms of how you can take those down. My philosophy is, again, if it's not 10 out of 10, don't close on it, right? Get some do something creative. Call the neighbor, assign to the neighbor, double close the property, whatever it may be. But don't take it down. You don't want to hold a crappy property or property that's even like right under 10 out of 10. Sweet. Mid-market pops. Now, most people are inside Leah are running 6- and 7-figure businesses just doing this mid-market pops. Okay. But I want you guys to think that that's not a strong strategy. It is a strong strategy. I'm just thinking about how can I make the most ironclad land business? So if I was a new land investor, I would start with the mid-market pops, right? Because you can sell one deal a month and make 20 to 30K a month. For most everyone out there, that's significant. And to sell one deal a month is not that difficult. It'll take you 6 months to get ramped up and to do it. But once you do it, you can do it again and again and again and again. And then it's just about doing a little more volume, a little more volume, a little more volume. That's a scalable model. That can take you to 6 figures a month. Cool. Then we start taking some of that profit, start building our recurring revenue. Okay, we start building a really robust, strong business. A lot of you guys don't know this, but in Q4 of last year, 2022, a lot of like some of the talking heads or people that you might see in the land space, a lot of them laid off their staff. Some all of their staff, some half their staff. And I think that's a lot of that comes down to not having the right infrastructure in the business. I'm happy to say that, yes, we've lost people, but we haven't fired anyone during this kind of slowdown in the market. I think, again, a lot of that's to how we built the business. The last point in our business, okay, we've only been working on this for about 14 months, so I am relatively new to this world. It's what we call life-changing value add, okay? The reason I could never do this in the beginning was I didn't have the experience. I didn't know what to look for. So this gives you reps. I didn't have the track record to raise money for those deals. And I didn't have the patience, right? To do a 12-month, like let's look at it like this. I could have a deal that was a buy for 100, sell for 200, cash close, just sell the thing. And maybe I could have subdivided that and I could have made 300, but it would have taken me 6, 8, 12 months. Who knows? I would have always taken the first option because I needed money in the business desperately. But if we can circumvent needing money now, we can be long-term focused. We can plant long-term seeds, right? And once you have a track record, raising money for those deals becomes a lot easier. And once you have a track record, you start to know what to look out for. It's really rare to think that anyone could come into this business and the first deal is like this. I know people that have done it. They almost always partner with a more seasoned land investor, right? We got a few folks that have partnered with us for deals that fall into this category. This will be like one of their first deals or second or third deal, but they're not going to take it down on their own. I heard a great quote, something along the lines of like, there's no real estate deal that hasn't been done before, something like that, right? I think it's a cool idea. And so there's always someone out there that can kind of hold your hand through the process. In fact, I'm working on 2 projects right now that are entitlements. And so we're entitling it for new home builders. And we're bringing in people that are helping, essentially consultants or whatever it may be. And you either pay them or you give them equity in the deal. And so this has been really interesting. These deals can bring in $250,000, $500,000, $1 million, $2 million, $3 million of profit. But they take a long time. They take a long time. And for most of these deals, the expectation is probably like 12 months, right? Now, you could be taking big rural plots of land and subdividing it. You could take land that's closer to the city that has utilities and subdividing it into smaller increments. You could be entitling land for paper lots and selling it off to developers. You could be rezoning land and then entitling it. So imagine you take a property that's zoned for ag and you change it to high density residential zoning. And so now we can get 10 lots per acre, right? Instead of 1 lot per acre, whatever it was. So we just increase the density and then we entitle that for a new home builder. You just added so much value. And all you had to do was be the guy that had to go and take the brain damage with the county, right? So there's kind of 2 things to think about here on the value add side. Okay, this is how I think about value add. There's 2 different things to think about. The one is, can we get more units out of a property? So think about a property as a unit. Okay, imagine going and buying 1 water bottle. Okay, what you buy it for is probably roughly what you can sell it for. But if I go buy 100 water bottles at Costco, maybe my per unit price for a water bottle is $1. And maybe I can sell those individually to someone outside for $3, right? Same kind of principle. So this kind of leads to the subdividing thing. Price per acre is always going to scale up and down with the size of the property. So the bigger the acreage, the lower the per acre price. The smaller the acreage, the higher the per acre price. So you can add value just by getting more units out of a property. We've got a deal right now that we just closed on 2 weeks ago. It's a 36-acre property, and we're chopping it up into 3 12-acre lots. So instead of 1 unit, now we've got 3 units, right? We bought it at, I think, $4,500 an acre, and we'll probably sell it at $12,000 to $14,000 an acre. All we had to do is get a survey, record that survey, get the new parcel numbers and legal descriptions, list it, sell it. Okay. We have another property that's been listed for a little bit now. It was 60 acres. We took 60 acres, chopped it up into 6 10-acre lots. We bought it for $285. We'll probably sell it at $650. Right. We've got a deal right now that we're entitling that I wasn't the deal finder on this. I'm just partnered on it. Buy for $150, about $100K in entitlement costs. You're in for $250,000. And it'll be worth about $1 million when it's said and done. Right. Pretty cool. This is the stuff that changes your life. You know, what I've learned is that it's really difficult to build wealth through cash flow. Okay? You can make money through cash flow. It'll take a long time. If you want to get wealthy, what you need are liquidity events. What are liquidity events? Selling a business, selling a big commercial asset, selling a big project like this. That's how you can go from having $100,000 in your bank account to $2 million in your bank account. In order to do that, we need skill, we need track record to raise the money, and we need patience, right? What I found over and over and over again in my entrepreneurial journey is patience wins, right? Patience always wins. Imagine that if, years ago, I just got on this YouTube channel and I just started selling things. It looked pretty weird. I've made over 1,000 videos giving with patience, planting seeds to build Leah. It's the same thing here in my land business, right? Just think long term, right? They say don't think in days, think in decades. And so that's kind of the framework for our land business. Recurring revenue covers costs every month. Know that our needs are met. Mid-market pops, that brings in our profit in the here and now. Like quarterly, boom, that brings in our profit. And then when we look at the life-changing value add, that changes the year for us. I keep on throwing this pen. That changes the entire year for us, right? Really, really interesting. You guys have any questions on it? If you guys have questions, feel free to share them in the chat. If you guys are like, damn, Sumner, this was really cool, I want to learn how to do the same thing, you can speak with myself and the team at landinvestor.co/apply down below. I hope this was helpful. What I will say, and someone asked me this question the other day, they're like, have you always thought like this? Like, did you know this in the beginning? No, I did not know this. I did not build my land business knowing this. I knew that recurring revenue was important. I did know that. And the way I knew that is I looked at what businesses sell at the highest multiple. It's typically software businesses like SaaS, right? People will pay 30x revenue for a SaaS business, and they'll pay 2x revenue for a service-based business. It's because recurring revenue is so valuable. And we have a business here where we can do it all, right? You can have big liquidity events. You can have these little pops that come into your business. You can have recurring revenue. So I knew recurring revenue was important, but I had no idea I was going to structure my business like this. It just came through trial and error. And the good news is, my hope is I can impart this wisdom to you, and a word to the wise should be sufficient. Hopefully you can avoid the trial and error and avoid the pain and just implement what you guys see here. I hope that was helpful, guys. If you have any questions, feel free to put them in the chat. I'm happy to help any way I can. The truth is, you don't have to be thinking like this deep into things when you're first getting started. You know, when you're first getting started, it's more about just learning the skill of land investing, right? What we teach inside Leah is, okay, learn the skill of being a land investor. Being a land investor is skill-based. How to pick markets, how to underwrite deals, how to talk to sellers. That's a skill. And you're going to have a one-to-one relationship because you're going to be doing all those things. Now, as you get deeper into the business, it's about how do we take that skill and build a business around it. And we start thinking systematically. We start thinking bigger, start thinking more long-term. And your job, not as a land investor, but as a land business owner, a land entrepreneur, land CEO, whatever you want to call it, is to think long-term, right? It's to be the visionary. It's to be the one thinking a year, 2 years, 3 years, 4 years ahead. Okay. So anyways, guys, I hope that was helpful. I appreciate everyone hanging out with me today. Hope you guys are having a beautiful Friday. Yeah, hope this was of value to you guys. I guess we'll call it good here, and we'll see you guys in the next video. If you guys like this video, give it a thumbs up. Please smash that like button and lets us know we're doing something right in this world. And if you didn't, you can give it a thumbs down too. That's totally fine. See you guys in the next video. Be sure to subscribe. Take care of yourself. Be well, everyone.